Zacks Rank Buys, stocks with a short-term buy or strong buy recommendation. Now, here are more Zacks Rank Buys. We're going to talk about a couple of momentum stock picks right now with Mike Vodicka, momentum stock analyst at Zacks.com. And these are a couple of different ones because I don't think you and I have ever talked about these before. Group 1 Automotive being one of them, GPI, the ticker symbol, in the automotive space. Well, it's amazing how I knew that, isn't it?
There you go, exactly. Yeah, it's an auto retailer. They sell both used and new cars, but they also provide a lot of services to repairs and things of that nature.
So this is a little different. They sell cars as well as auto parts.
No, actually, they don't really sell auto parts, but they'll provide like mechanical services for their customers, or
even that is okay. So they do the sales of the vehicle and then the servicing.
That's right.
The way a dealership would.
Yeah, so a little bit diversified in terms of their business plan. The company's only been around since 1995, so not that old, and a market cap of $659 million. So it's a small cap. It's a smaller company.
Yeah.
We're right at the end of third quarter earnings season right now, so I figured I'd give you some background on their third quarter results. They reported October 27th. Their sales were down a little bit year over year, 14%, which is fairly respectable in that auto sales space. But they did produce a decent beat, 71 cents per share. It was 1 penny better than the Zacks consensus estimate. The company has beat in each of the last 4 quarters. Building on the momentum a little bit is, you'd think that, this is autos have kind of struggled. There's the Cash for Clunkers program going on right now.
Well, it's over with, but it was going on.
Yeah, and but adding to that conversation a little bit to give some more texture on what the company's doing is that, they did get a boost from Cash for Clunkers, but they've also initiated a couple of strategic programs to help them with their inventory management. To give you a number on that, the new vehicle inventory for this quarter was down $75 million to $300 million just from the previous quarter. And then year over year, their inventory was down $370 million. So that really frees up a lot of working capital for them that they can use for other kinds of purposes. So it gives you kind of a perspective on where are their earnings coming from. Also, to sales, general, and administrative expenses, they're targeting a reduction of $120 million from last year, 2009 current year. So again, that's another area where you see they're having significant cost cuttings, kind of making up for some of the loss in revenue.
Sure.
So the quarter was kind of interesting. Since then, we've seen estimates tick higher. The current year is up 28 cents in the last month or so. The next year estimate is at $2.36 per share. That's a 35% growth projection. Shares are only trading at 15 times right now, so that's a little bit of a discount to the market, so there's a little bit of value there. And then we've seen this play out on the chart. We've seen some pretty big-time gains here. Share price bottomed out at about $7 in late February. It recently topped off at 35. It has pulled back a little bit, but it contacted a long-term trend line, and it's rebounded from this trend line, so it's kind of regained some of its upward momentum.
All right. And then the other one is J. Crew Group, JCG, the ticker symbol. This is the specialty retailer.
Yeah, right. J.Crew is kind of in an interesting space. They're a higher end retailer, but they're a little bit more affordable luxury, a little bit less expensive than some of the real high end people. So it's kind of a combination of value and fashion, so to speak. But they do men's clothing, women, and children. The company's been around since 1988. They have a good history, and market cap is $2.7 billion. So J.Crew is a pretty big company.
Fairly decent size, yeah.
Yeah, it is. They reported their quarterly results August 27th. I think they're reporting third quarter results this week or next week. But they saw an increase in sales year over year. Sales were up 6% from last year, and they had a really nice earnings beat, 29 cents per share, which was 14 cents better than the Zacks consensus estimate. Of course, they've beat in each of the last 4 quarters. That's something that we always look for. They also had a nice build in their cash position. Their cash position increased to $204 million from $113 million, so that gives them a little bit more flexibility, helps insulate their balance sheet a little bit. Estimates are looking strong right now. Current year estimates at $1.56. Next year estimate is at $1.88, and that would be a 21% growth projection. Okay. Moving on to the valuation picture, shares are a little bit pricey, trading at 26 times, but in light of the next year growth projection, that does look a little bit more reasonable. And then over the last 6 months,
Yep.
this is a momentum stock for a reason.
I can see it.
They've done well. The share price bottomed out at $9, and recently it's been trading around $43, $44. So we've seen some nice upward momentum.
All right, do you own either of these two?
No, I don't.
All righty. If you want to check out more Zacks Rank Buy stock pick ideas, go to Zacks.com's homepage. And over in that upper right-hand corner of the homepage is where we put 4 new stock pick ideas, one in each of the investing categories that we write about for you each business day. With Mike Vodika, I'm Terry Ruffalo.